Ladies and gentlemen, good day and welcome to Onmobile Global Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pratik Jagtap from EY IR. Thank you, and over to you, sir.
Thank you, Nirav. Good day, and welcome to Q4 FY23 earnings call of Onmobile Global Limited. Representing management today, we have FC, Executive Chairman, Sanjay Baweja, Managing Director and Global CEO, Ashish Chatterjee, Global Group CFO, Neer, CEO of Onmo, Biswajit Nandi, Chief Business Officer. The call will start with brief update about the overall performance during the quarter by Sanjay Baweja. Then Neer will give brief update on Onmo. Ashish will update on financials, which will be then followed by FC, speaking on overall business activity and sharing his thoughts on future plans. Then we will open the floor for question and answer session. I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties that we see. For such list of considerations, please refer to the earnings presentation. Onmobile Global undertakes no obligation to publicly revise any forward-looking statement to reflect future or likely events or circumstances. Having said that, I now hand over to the call to Mr. Sanjay. Over to you, sir.
Thank you, Pratik, and thank you all for taking time to join us today. Hope you're all doing well. The results and presentation are already posted on our website, and hopefully all of you have had a chance to look at them. I will give a brief update on our business, especially the expectations and some targets for the next few months and quarters. And later, Neer, and after him, Ashish will take you through all the highlights of our financial performance, post which, of course, FC will talk about his thoughts on how the company is going. Let me start by saying that this has not been a good quarter for us. Our revenue has been lower than expected, and this has had its impact on profitability. Additionally, with that, the one-time impact that we've had due to organization transformation also added to our lackluster performance. I will delve into this a little later. I also have an array of good news which are going to have a lasting effect on the company in the current financial year and beyond. First, I want to start with the launch of Gameize, our first ever SaaS-based gamification platform for brands across industries. We aim to extend our gamification platform to over 500 enterprise and top brands across industries by 2025. With Gameize, we intend to help enterprises drive acquisition, engagement, and user retention with a customized strategy. This is our first foray outside the telecom operator domain, and we believe over the long term this will serve us well both from a revenue and profitability perspective. At a steady state, this product, like the others that we've recently launched, has a higher EBITDA potential than our current products. Secondly, I want to let you know that Telefonica has extended our contract, which was due for renewal in July 2024, up to July 2026, without payment of any additional upfront fees. This will have an immediate impact on our profitability and will also positively impact our cash flow over the next couple of years. Third, we've got an order for tolls business from América Móvil, which involves 11 countries, including Brazil and Mexico and Chile and others. This is likely to have a stabilizing effect on our legacy business this year, which has shown a declining trend over the last few years. Now coming straight to Challengers Arena. Throughout the quarter, Challengers Arena sales saw steady growth. Revenue from Challengers Arena during the quarter grew in line with the number of customers who went live last quarter. During the quarter, cumulatively, 42 customers went live versus 35 customers at the end of Q3 FY23, reflecting an increase of 20%. In terms of profitability, CA revenue increased nearly 3 times year on year, and it has increased 22 times in the last 8 quarters. In Q4 FY23, 4 new customers agreed to our terms of challenge arena, taking our cumulative agreements to 66. We are targeting much better movement in Q1 FY24. In fact, as we stand today, we already have 48 customers live, and we're looking to close the quarter with 54 live revenue-yielding customers. As for customer confirmations, we expect the momentum to continue and these cumulative agreements to reach around 75 by the end of Q1 FY24, driven by successful outbound sales efforts resulting in increased sales. Further, out of these 66 customers, 50 of them are new logos, which is almost 76%. These do create a potential for future opportunities for cross-selling other products to them. In terms of usage and actual consumers, the cumulative gross paying subscribers at the end of current year stood at 17.56 million as compared to 13.64 million at the end of December 2022, a growth of 29%. We are targeting to touch almost 23 million subscribers in Q1 FY24. We are continuing to see healthy pipeline and expect to be live and sign many more clients in the coming quarters. We have almost doubled our net captive base in FY23 from a 1.66 million in Q1 FY23 to 3.1 million in Q4 FY23. We are targeting to touch 4.84 million subscribers in Q1 FY24. As mentioned in our previous earnings call, we are currently in the investment phase, investing in growth through disproportionately high marketing spend, particularly in the new geographies or operators which we are constantly going live with. We anticipate this to stabilize, resulting in an improvement in profitability from Q1 FY24. However, the marketing spend continues to trend as a percentage of lower as a percentage of revenue quarter after quarter. We are targeting for Challenges Arena to generate a EBITDA of more than 25% in the coming years, which is significantly better than our current product. Let me talk a little about Onmo. Of course, Neer will cover more in detail. Onmo B2B business has started generating revenue from Q1 FY23. As on Q4 FY23, we have 19 customers who have agreed to our commercial proposal. Out of these, 4 were live at the end of last quarter. Today, as I speak, we are already live with 10 of them, which means in the past 2 months, we've got 6 more customers live. We expect cumulative agreements to reach around 26 by the end of Q1 FY24. And for our revenue, it grew by 2 times on quarter-on-quarter basis and close to 11 times since its inception. Our focus has been for going live with more and more telcos efficiently and smoothly. We have crossed 500,000 subscribers line and expect it to go up to 1 million within the next 2 quarters. In terms of products, we are making some major progresses around B2B support, onboarding, and more features to drive deeper engagement and longer-term retention. We continue to see strong traction among the prospective customers. We are confident of generating much higher revenue in FY24. Onmo is and will continue to follow the growth path of C in the coming quarters. Let me update on tones and video. Legacy business has been facing some challenges over the last few quarters. Tones de-grew 4.6% quarter-on-quarter. This is expected to bounce back 1 or 2 quarters with new accounts added in the legacy business, which I just talked about. Videos also saw a marginal decline of 1.1% on quarter-on-quarter basis due to euro currency depreciation. Having said that, as mentioned earlier from customers, we are now seeing traction and we're able to cross-sell our legacy business to new logos which we have acquired through CA. And we are positive about closing more deals in the coming quarters for legacy business. Let me come back to profitability part again and also how we are looking at revenue in the current year. We have always been concerned about our cost base, especially in the legacy business. Mindful of that, during the last quarter, we undertook a transformational revamp aiming at right-sizing the operations, leading to improved productivity and efficiency while riveting our focus on gaming. This exercise, though on one side had a one-time hit to our profitability, is expected to yield benefits starting from the current quarter, that is Q1 FY24 itself. We believe that the worst is behind us, and in FY24, we are targeting to achieve a revenue of much higher than 600 crores, like the old times in FY18. That was like 5 years ago, when we did have revenues of more than 600 crores. As per our strategy, we expect overall gaming revenue to be higher than 25% of our total FY24 revenues as compared to 13% in FY23. And let me reiterate, with much better margins as compared to the current year. Before I hand over to Neer, let me say that the darkest hour is just before the sunrise. For us, this quarter seems to have been that hour. So over to you, Neer. After Neer, Ashish will talk more about the financial performance. Thank you. Neer.
Thank you so much, Sanjay. Hello, everyone. Good to be with you. Again, I'm Neer, and I'm heading the Onmobile product and team. So as Sanjay just described, Onmobile is definitely picking up and taking off into a great start as we roll out with more and more customers. We have now gone live with 10 customers already, gone from only 4 last quarter, and we have lots of confirmations. We are planning to go into dozens of new telcos this year. The potential of Onmobile is something I'm very, very excited about. As we said many times in the past, Onmobile's potential is going into much more engaging, polished, and premium experience as gaming. It's something that I know very well from my gaming past at Take-Two and Zynga. And the team is working very hard now to optimize, grow, and create this really engaging and exciting experience. The focus of the team in the last quarter has been split between go live with all the customers, support the different needs and different requirements of those customers, and on the same time, build this product, which we are getting more and more excited about. We're now in conversation with many more of telcos on top of the ones that we already committed in our plan. Some of them are in North America and in Europe that show quite a lot of excitement using and showcasing their 5G networks with Onmobile. Onmobile is a great opportunity for telcos to really showcase how the potential of 5G in gaming. We're giving real-time experience, we're giving truly social experience, and this is a perfect fit for telcos, and this is why we're getting more and more interest. So I'm hopeful, and I'm very excited about the rest of this year as we roll out to those new customers and get new users and subscribers all over the world. And this was my part. Thank you so much, and I'll head over to Ashish.
Thank you, Neer. A warm welcome and thank you everyone to join us on this call. I'll share the key highlights of our financial performance for this quarter and full year ended March 31st, 2023. In terms of the full year FY23 performance, we reported revenues of INR 549 crores, marginal growth of about 1% on a year-on-year basis. Gross profits grew by 6.3% to INR 278 crores, and our gross margins improved by 258 basis points to reach 52.9%. The growth was primarily driven by Challenges Arena. On the cost front, in FY23, due to higher investments in CA and Onmo, our marketing expenses have increased year-on-year. User acquisition spend on gaming segment as a percentage of gaming revenue was approximately 55% FY23, mainly on account of new launches we did in this year. But this will taper out significantly in FY24 as the business matures across geographies and across operators we have already launched. Manpower costs saw an increase of 8.8% year-on-year, but a decrease of 3.6% quarter-on-quarter. The increase was largely due to a non-cash item, which is the ESOP cost, which is higher by 36 million versus FY22. EBITDA stood at 12.7 crores with a margin of 2.4% for FY23 on account of higher marketing spends on new products. Our profit after tax is rupees 6.8 crores with a margin of 1.3%. In terms of quarter 4 performance, we reported revenues of 135 crores. Gross profit witnessed a healthy growth of 10.9% on a year-on-year basis to rupees 70.2 crores, and a gross margin improved by a big 496 basis points to reach 54.8% on a year-on-year basis. EBITDA stood at 2.1 crores with a margin of 1.6% for the quarter. We had a loss of rupees 2.1 crores. The decline in PAT was largely due to the one-time severance cost of 5.2 crores. But it may be noted that we have optimized our resources, and our annualized savings that will accrue to us in FY24 will be close to rupees 19 crores. Overall, DSO has improved to 115 days. Our net cash balance has improved to rupees 78 crores. During the quarter, we also incurred R&D or product development expenditures to the tune of rupees 20 crores as we continue our foray into the B2B space in gaming. Gaming today, as Sanjay mentioned, is close to 13% of our total revenues, and it's only going to go up from there. With this, I will now hand over the call to FC.
Thank you, Ashish. Thank you, everyone, for joining. As Sanjay said, it's really not the quarter we're expecting. I think we can do way better. It was for sure a big quarter. I look at the effort that the team really looked at every single, job refocus in the company. That restructuring, everybody was re-questioned. It took a good quarter. It was all done by March 31st, so the team was quite quick on doing the evaluation, really doing the analysis and figure it out. It has big impact on profitability for this year. Unfortunately, obviously, clearly that discussion within internal employees had an impact on the revenues on one end, and on the other end, when I look at the marketing spend, we did spend the marketing. So the performance on the marketing to revenues was clearly not there. Not the money was invested. Performance marketing did not produce the revenues we were expecting for multiple reasons, by the way, which are specific to that quarter. It's not something that will go on. So I think in the previous quarters, as you saw, the performance marketing was paying off the revenues. So that to me is a bit the assessment of this quarter. On the positive news, honestly, the Onmobile is growing exactly as planned. You see almost 100% quarter on quarter. The plan is and stays the same, does not change. What we don't see in the numbers is the split between the mobile gaming, where we have 3 new products now with GameEyes, Onmobile CA and GameEyes, and the mobile entertainment. So, when you look at the actual split, we have pretty much 90% gross margin on the gaming versus 50% on the mobile entertainment. So that's why we're spending so much effort on mobile gaming. Obviously, there's more marketing, but that's where the growth is, right? And the EBITDA today, coming along, right, we should be doing a very good EBITDA margin on mobile entertainment with this new restructuring. That's why the team spent so much time restructuring it. And the cash, obviously, right now, the cash generated by mobile entertainment is invested for now in mobile gaming, but that's a big switch during the year, meaning that by the end of the year, our goal is to have mobile gaming at EBITDA neutral, whereby mobile entertainment is producing the EBITDA. So that big investment phase is finishing along the year. And when I say it's a big year, then on this call here, really pushing all the operators worldwide. We have the goal to activate 100 operators this year, which is huge out of our 200 operator plan. I'm not changing the plan. We're not changing the plan. We have 200 operators to activate within 2025 for gaming. And the reason why we launched GameEyes also is that after that, the view is to get into the enterprise market with a view to get about 500 enterprise on that side. So, the plan to me is very solid, quarter to quarter. And for me, I trust that the team will get there because I'm seeing the results right now, right, of May. It's a totally different picture. So to this, I will open the floor for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Mithun Ashwath from QI Advisors LLP. Please go ahead.
Hello.
Yes, Mithun, go ahead.
Yeah. The question is on challenges arena. We saw that the net subscriber are remained flat quarter on quarter despite so much of marketing spend. I just wanted to understand what's the difference between the gross and the net number, and why is there such a big gap, and how do we see this progressing quarter to quarter? Are we seeing like a leveling off in terms of the net subscribers? So just wanted to get a sense, an understanding on this.
Nandi, you want to take this?
Yeah, sure. So I'll take your second question first. So gross adds basically define the number of users that's been added in that particular month or quarter, and net adds means the number of users that remain at the end of the quarter, right, after all the churn. Now, why you see that while we have the gross adds in the quarter and decent gross adds, we had a one-time impact of a particular customer because of which our churn rate was pretty high. It is a boundary condition. We have recovered from there, and that's why our net active base remains flat between Q3 and Q4. I hope that answers your question.
Yeah, I'm just trying to understand, is there like a fatigue amongst users already? Because the initial spurt of demand has happened, but I'm just trying to understand the first few clients that you sign up, are you losing customers there? And the new clients that you get, the customers there get activated. I'm just trying to understand on a steady state basis, will this actually remain and provide some solid base of business? Otherwise, you would constantly need to keep spending on advertising or marketing to keep users on the platform. So just want to understand this.
Sure. Yeah, sure. So our gross adds actually constitutes from two kinds of customers, right? So one is from the old customers and then the new customers that we activate in that quarter, right? So we keep on adding subscribers from both these buckets, from the old customers and the new customers. And we don't see any kind of fatigue in the old customer base. So no, this was just one aberration and one quarter. And we kind of predict very strong growth in the net active base in Q1.
No, I'm just not understanding how can the net customer base remain flat quarter on quarter despite customer additions as well as new logo signed. So just didn't understand that. Yeah.
Yeah, if I may add. See, what you saw was a one-time impact of a customer where the net adds actually had a churn, which we'll see revamping back in the coming quarter. And more importantly, 50 new customers are getting added this quarter. So we'll see new customers getting added or new subscribers getting added on the new operators as well. So that's the reason the growth will come back in the coming quarter. But that one customer issue was an aberration, which Nandi pointed out, which is going to get regularized in the coming months, like this quarter, basically. I hope that explains it.
Yeah, just a follow-up on this. I'm just trying to understand, because if you have so many more customers being added in this quarter, the marketing spend again jumps up a lot. So I'm just trying to understand, is this like, that initial euphoria is there, but there is nothing beyond that. So just trying to understand.
Yeah,
Is there like a breakup of older customers and what is the profitability of theirs and the new customers and their profitability? Otherwise, this we could be, again in May of 24 and having the same discussion. So that's fine.
Let me try and answer that for you, Mithun. I think the way it works is that initially when we start with a new customer, and I'm saying not the consumer, when I say a new customer, let's say a new operator, initially our marketing spend is higher and then it tapers down. So for a mature customer, we've been able to bring it down to in the 40s and the 30s. Whereas when we start with 65% marketing cost. So progressively, if you notice, our marketing spend as a percentage of revenue has continuously gone down. In fact, over the last 4 quarters, overall it has gone down by about 700 basis points or 7%. And we believe that in this year itself, we will be down to 50 or even lower. So while what you're saying happens when a new customer comes in, yes, for a new operator, initially there is an increase as far as the ad cost is concerned, but over time that continues to decrease, and we see a clear 20% reduction, 20 to 25% reduction, which happens for a mature account versus a start account. So that's a clear indication of how things are going to happen. And once we have a much larger base, this overall number will be in its 40s. And with, like FC was mentioning, and we've been saying earlier, with the gross margin at 90%, we can do the mathematics, and we have some amount of very little cost. You can imagine what kind of profitability we are talking about.
You also mentioned in the current quarter there has been some expense towards some settlement of employees. What is the saving on an annual basis that we will see in FY24? You mentioned it was 19 crores. So just wanted to understand that.
Yeah, that's right. So the annualized savings for coming year will be 19 crores. So that's a big plus coming to us in the next fiscal, in FY24.
And my last question, if I can add, is on your Chingari investment. I just wanted to check, would you look to monetize that because your cash pile now has deteriorated quite a bit, and would you want to utilize that cash for the current core businesses of Challenges Arena and Onmobile?
So yes, that's an option that we have on the table. We will, they are Chingari on its own is looking to raise money. They've just raised a small bit of money recently, and what we told is that within the next 6 months they will be looking at the next raise, and at that time we will definitely seriously consider getting monetization for it, either completely or partially at least.
What would that amount be, even if at cost?
So at cost it is very less. It's about 35-40 crores. But I think that's not something that we're looking at. The valuation is much, much higher.
Okay. Thank you. All the best.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. The next question is from the line of Jagdish Sharma, individual investor. Please go ahead.
Hey, hi sir. This is Jagdish. The thing is that you told like in the next quarter in Challenges Arena.
Sorry to interrupt you, but your voice is not coming clearly. Can you please speak for the handset?
Yeah, I'm using the handset. Is it audible now?
Yeah, slightly better.
Okay, sorry. So in the last quarter, like in this quarter, you have added 4 customers in the Challenges Arena. Am I right?
Yeah, that's correct.
What is the next quarter's, next quarter you're going to add?
So next quarter, already, like we said, we've already added 7 customers as we speak, because April and May have been very productive for us for Challenges Arena already.
Okay. Fine. So, sir, another question from my side is like, you're getting into esports, right? Social esports.
That's correct.
Yeah. So, do we have kind of form a team and enter just like what the Western girls are doing? Do we go and do that kind of thing here, or like basically it's a entertainment kind of thing?
Dante or Neil, would you want to answer that?
Sure, I can. Can you repeat the question? It wasn't very clear.
So they will do a lot of marketing and esports things, and they kind of invest in that, and they make quite a lot of money, right? So are we kind of going in that way, or we are gonna not pursue that kind of thing in the esports?
Yeah, I will try to answer. Hopefully, I got it right. We are going for our at least on the Onmo side. We're right now focusing on going live with many customers, not offering an experience for money, but offering an entertainment recreational experience of playing premium titles, experiencing them in a different way that people usually have never done, and also collaborating, competing, viewing others. So that's the esports part at Onmo. And Onmo, you can watch others play those games, and then you can challenge them, you can compete them, you can work together with them towards a shared goal. And this is the concept of esport. And we're seeing signs, and the users that we're working with already giving us very strong indication that this is a very compelling proposition. This is the stickiness of the platform, and this is what telcos are now very excited about, and we're selling that for subscription. So this is the model right now. We're selling an esport experience of titles which are well known and loved in a way people never experienced before, for a monthly subscription or weekly subscription. So this is the model in which we're going after.
Okay, so we are not going to do a esports kind of thing, like in the Western world, the team is formed like after 2-3 years and nothing.
This is the focus for right now. We could go into many directions, but right now we're focusing on really great social esport experience for subscription.
Okay, so that is the case. Fine, sir. So what is I'm just coming back to the challenges right now. What is the growth guidance there?
So from a gaming perspective, we have the 2 products, Onmo and Challenge Arena. We expect around a 2.5x growth in the gaming business for this year.
Okay. Fine, sir. So, fine, sir. Thanks, sir. All the best. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Ajay Upadhyay, individual investor. Please go ahead.
Hello.
Yes, sir.
Hello.
Yeah, Ajay, go on, please.
Yeah. I'd like to know what exactly in revenue terms is the number for Challenges Arena, Onmo, and Game Eyes? In absolute numbers, money-wise, not percentage-wise.
So Game Eyes, of course, is just starting.
I'll be asking you what Game Eyes is all about, but just wanted the numbers first. Yes. What revenue did you do in Challenges?
The Challenges Arena is roughly around 58 crores in this fiscal. And Game Eyes has just started, so we will not see revenues in this quarter. And Onmo is close to around 10 crores. Sorry?
Q4, what was the revenue?
Q4 is also clocking quite well, so roughly around 11 crores thereabouts. So 18.5 crores on Challenges Arena for this quarter.
18.5. And Onmo?
Onmo is a small. As I said, it's a beginning thing. It's around 4.5 crores.
4.5 crores. So if I was to project Q1 now, I mean, you're projecting what, 2.5 times?
No, not for Q1. Sorry, I said year-on-year growth of 2.5 times. Yeah, that was not quarter-on-quarter.
No. Yeah, so what can I expect Q1 to be?
I mean, we'll not be specific, but we expect robust growth.
So 18 can be expected to be 40?
I don't know. That 18 to be 40 will mean more than 2x. So
okay, what was Q1 this year? What was Q1 this year?
No, so Ajay, if 18 was like...
no, I'm asking, I'm going back to Q1 of this year now.
Oh, this year?
The year it is past, yeah.
That was small. We'll just get that. See, Onmo was very, very small. And
no, Challenges Arena. I'm still stuck with Challenges Arena. Was it about 5 years?
PA would be around.
That's a historical data. There's just a number you have to give me.
We don't have it offhand, but it will be about close to about 10 crores. So we would have doubled from Q1 to Q4.
Okay, so you're expecting a 2.5, so the growth can be maybe 1.5 to 2.5, that kind of growth on as you progress?
Yes, we are.
Is it sensitive to the? Is there any seasonality involved in this?
No, hardly any seasonality as far as CA is concerned. We expect almost continuous growth. I mean, they're good at this.
Basically, marketing and your clients getting on board. That is
in Q4, like we talked about, but otherwise, we will see very good growth as far as CA is concerned.
Okay, so 58 is likely to become 150. That's what you're trying to say.
Yes.
And Onmo, how would the Onmo progress?
Oh, the trajectory would be similar. Trajectory would be similar or better because they
No, Onmo is a different profile, customers and consumption pattern, etc. So why must it be similar?
Yeah, right. What we have seen as of now, for example, is they are following the trajectory. If you recollect, we were about 10 crores for CA for last year, and we are 58 now. Similarly, we were about 12 crores, sorry. This year, Onmo is about 10 crores. So we expect similar growth happening in Onmo. May not be 58, but would be a decent nice triple-digit growth.
Triple digit will take me to 100.
100 at least. It could be 300, 400%. So that's like, we can't be very specific, Ajay. To be honest, we can't be.
I understand. You can't project into future. If you were able to, then you would have different stories all along. But I'm just trying to get some ballpark because I think all your shareholders would like to have some clarity.
Absolutely, and we want to give that. We want to give that transparency, and that's why we said that overall gaming for both put together, we will be about more than 2.5. We'll be from where we are this time to 2.5. That's the broad range that we are targeting, and that's why we want to give that out very clearly.
And yes, Ajay, you're right. When Onmo starts entering the tier 1 markets, which will naturally enjoy much higher ARPUs, we'll see a far more rampant growth that will happen more closer to the last quarter of this fiscal coming FY24. But Onmo growth will currently follow the similar trajectory like Challenges Arena and then start peaking as we can enter tier 1 markets.
Thank you. Ajay, I'll request you to join back for a follow-up question. Next follow-up question is from the line of Mithun Aswad from Kiva Advisors. Please go ahead.
So, you mentioned that you are targeting about 600 crore of revenue for the current year and 150 crores from the gaming based on the 25% you mentioned. And you mentioned that the EBITDA for the gaming would be break even at 150 crore revenue. Is that correct? What you mentioned? And I just wanted to understand on the remaining 450 crore revenue, what kind of margins would we see? And plus, the 19 crore saving. So I just want to get an understanding of, what would, a blended EBITDA you're looking for by FY24.
So, while specifics will not give, but let me give you a sense of where we were and where we would likely to be. If you were to look at our EBITDA from the traditional businesses, we were in the range of 9-10%. We expect now to be closer to between 18% plus kind of level. So that's the broad change that we believe in the legacy business that's likely to be. For Challenges Arena, till now, we were slightly in the negative territory. We will be completely positive in CA quarter after quarter from this quarter onwards. So that's the other change that we are seeing, and therefore, and every quarter it will be a positive direction as far as EBITDA is concerned for Challenges Arena. While we can't give specific numbers, let me just say that the trend is completely from a negative when we started with Challenges Arena to now a positive, and like we said, at the mature level, we will go 25% and beyond as far as Challenges Arena is concerned. But that may take some more time, not within this year, maybe only next year.
Okay. So, on a full year basis, you are looking at, 15% margins for the company. If I assume 18-20% on the existing business and a minor margin on the gaming business.
Mithun, you're a master of mathematics, so I would just leave it at that.
Right. And would we start seeing such improvement from the Q1 itself, or it would progressively improve through the...
We will see improvement from Q1 itself.
Great, sir. Thank you.
Thank you. Next follow-up question is from the line of Jagdish Sharma, individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity once again. So, what was the guidance for Onmobile revenue? Just to repeat that, I missed that one time for the next time. 25% growth?
Sorry, please, can you repeat your question again? I couldn't understand it.
Yeah. What is the Onmobile revenue guidance, sir? It is around 10 crore, right?
10 crores for the year, that's correct.
So next year also 10 crore. So it's like overall 20 crore or the same 10 crore?
No. Next year it will be, like we said, it could be 300% growth or like about, it's not 10 crores.
Okay, 300% growth. Okay, sir. With any EBITDA margin?
Too early to talk about EBITDA on this one. Specific numbers on this.
Okay, sir. So, and also this is second thing is like, if you're guiding for 600 crores of revenue on FY24, you expect any degrowth in the core business, sir?
We've had some new customers coming in, like I talked about, coming in the business for this year. So we expect it to stabilize. We don't expect degrowth, but yes, the effort will be to maintain parity and maybe grow a bit as far as the legacy business is concerned. Stones, especially, we expect growth coming towards the end of this year. Sure.
And also, if I add on the legacy business, we have two big improvements that we announced a little while back. One is the entire benefit of the restructuring exercise that we did. The annualized savings of that being 19 crores will actually accrue to the legacy business P&L. Apart from that, the Telefonica Spain extension that we have got, which is for 2 years, that will see a big benefit of around 14 crores to our profitability. So largely we'll see legacy business grow at the top line and at the bottom line even more significant, really better on the profitability aspect.
Okay. If I may ask another 2 questions, sir, if you're okay.
Please.
Okay. So the another question is like you are saying that Challenges Arena right now they are earning around 57 crores, but in the next year, like now by March 24, it will be around 150 crores. Am I right on that?
So we are at about, we can't give specific numbers, but we will be triple-digit growth for sure.
Okay.
Like I said, the gaming business itself together will be around 150 crores plus. So let's just leave it at that. We can't be very specific in terms of overall, product by product numbers.
Fine. What about EBITDA of that?
So positive EBITDA for sure. For Challenges Arena, it's very, very positive EBITDA as we go along in this year. And we've not had very positive EBITDA last, but this year all along we'll have positive EBITDA for Challenges Arena. And improving by every quarter. Quarter after quarter we'll see improvement in Challenges Arena EBITDA.
Thank you. Jagdish, I'll request to join the queue again for a follow-up question. Next question is from the line of Ilesh Gopani from Gopani Securities and Investments. Please go ahead.
Hi, thank you for the opportunity. I have 2 questions. We have skipped dividend for this year, so are we not eligible for giving dividend or because we have lost in the last quarter? And second question, since many years we are facing problems only and the revenue is remaining same and we are just listening to your answers. So the promoter stake is less than 50%. Why can the promoter not buy shares from the market and make the percentage holding more than 50% so it can become a fairer company? Thanks.
So I'll take it. I'll take it. First of all, thanks for mentioning the promoter. For you to understand, we've been there since day one, right? We created Onmobile back in 2000. And we did this with a lot of investors also, right? So my share is about half. The other half is many investors, which have been really, really patient, guys, to be fair. I believe, as you know, in the company and we're building, we've not sold 1 share in the company. We own our shares through a U.S. holding, OMZ, and for tax purpose, we kept it at just below 50%. So that's the main reason we're not increasing, but we're not selling either. So that's the first point I wanted to share. Second point on dividend, as I was saying, it's a year really where it's a big year for the team, right? We have a lot of deliveries, and we still have a lot of investments. CA now is from eating EBITDA to EBITDA positive. The investments we're putting in Onmobile in the first quarters, and our goal is that flying on its own wings, but it's still a big investment. And the decision on dividend was that instead of calling a dividend now, we could do an interim dividend later on. So we prefer to be more cautious and make sure that we have, no issues whatsoever on cash, although we are doing big investments. So that's the balance that we've decided here, and that's why there's no dividend in this quarter.
That other third part of your question, whether we were eligible or not, we were eligible. So that question, that board decided differently is what FC just talked about. But from an eligibility perspective, there's no issue per se.
I'll just ask one more question. What will be the cash position on March 24, according to your estimate?
So it will be similar. It will be slightly better than what we have today. As we just mentioned that we'll have good EBITDA margins coming from all our product engines.
Okay. Thank you, sir.
Thank you. Next follow-up question is from the line of Mithun Ashwad from Kiva Advisors. Please go ahead.
Yeah. So I just wanted to understand, obviously, with this challenges in Nina and Onmo, we seem to be building a reasonably sized gaming business. And, you've given us, quite aggressive guidance both on profitability as revenue. We've seen, guidance or promise earlier as well. I just want to understand from, the promoter's angle as well, what kind of confidence do we have this time of actually delivering what we are, trying to forecast in terms of probability terms, so that, even if we were not to achieve what we sought out to, what could be, our like base case sort of numbers. So just wanted to understand what kind of confidence level we have in achieving those numbers that we've set out to do.
It's for me, it's clear, and it's a shame that we can't share all the detailed number, because for me, the gaming business and the mobile entertainment business are two segments, and the profitability, as we discussed, is really different. But also, what you would see is that the revenues from the gaming is delivered as planned, right? We started back 14 months with Challenge Arena. First year was in the 1.5 million of revenues. Now, we're going in the 7.5. That growth is, and it did materialize in the last year. Same thing with Onmobile, right? We just launched with the recent operator. Our first year is in the 1 million plus range. So it is following at least the same trend when we launched with Onmobile with operators. So when we look at our plans for the year and deploying, right now, the way we are, having traction selling to operators, deploying, going live, and getting the revenues, I am very confident on the fact that this gaming business will be a $20+ million by the end of the year. When I say this, the whole gaming segment, right? What to be honest with you, in some sense deceived me for the year, right? And that's why we don't see any growth whatsoever. It's not that the gaming is not growing; it is growing, and it is getting material also. It's the mobile entertainment business in some segments, right, where it's underperformed. It's been there for 10, 15, 20 years. And in some cases, I don't accept that business also going down. And to be honest, I know the team said legacy business. I hate the term legacy. For me, we're doing, mobile entertainment, which is relevant today, was relevant yesterday, and will be relevant tomorrow. So I don't accept that business, going down. And what really, for me, the deception is not what the gaming has produced. It did produce what was planned. It's the mobile entertainment business that did not produce the revenues that we expected, and we got hit. And when you look on a consolidated basis, the performance, it looks like we're flat, but we're not flat, and that's why I think the mobile entertainment business, yes, produced good EBITDA margin. It will be even better now with the restructuring that we've done. But I also think it can grow, right? And if we can just change the mindset, and obviously the focus in the last 2-3 years was really on gaming. So, it's tough to focus on multiple aspects within the company. So we did deliver that part. To me, it's really important that the mobile entertainment business in the coming year is at least stable, and there's no reason it's not growing. Now, if we can just switch that back and start growing mobile entertainment and have the same growth that we plan for gaming, it's a totally different scenario here. So that's why, when we do our assessments and when we did the budget this year, we're quite confident on our numbers. But I 100% agree with you. When you look at the 8 last quarters, it looks flat, right? And you're wondering, is the plan working? And unfortunately, I need to see 2 plans. I need to show you 2 plans for you to understand what's working and what did not quite deliver on the mobile entertainment side.
The line for the participant dropped. We move to the next participant. Next question is from the line from Gopani Securities. Please go ahead.
Hi, sir. I want to understand what can be the revenue of the game size platform that we have launched, and are we going to tie up with the telephone operators only, or telecom operators only, or any other enterprises to make games?
So Gameiz has a bright future, and that's where the difference lies. The canvas for Gameiz is enterprises. Any enterprise which is online in its business opportunity is our prospective customer, not just the telecom operators. So it's a much wider canvas, but we just started there. It'll take us some time to ramp up, and we don't talk about numbers, but there'll be small numbers as yet to talk about. Although we've already got an anchor customer, and we're already discussing with 12, 13 more customers. But early days for us to start talking revenue in a big way, but it has a much wider canvas than the telecom operators that we've been operating with till now.
Can you give a number for the full year?
No, like I said, we just about starting, so it's unfair to give a number on some specific product because we're starting.
How do you charge in this game size business? It is free initially, or how do you charge for them?
There will be multiple pricing arrangements, just like a typical enterprise SaaS product. It will be, there are different pricing methods both on usage and users. So we'll be charging on that basis. And as Sanjay explained, we will be establishing, use cases which will be, in this, and that's what basically we kind of focus on the first year. And then once we have those established business cases, the takeoff, like in any SaaS business, would be very rampant with, the incremental margins in a SaaS business are far more superior. So that's the reason we have looked at Gameiz as also one of our, key aspects that we want to get into.
Okay. Thank you, sir.
Thank you. I now hand the conference over to the management for closing comments.
Yes, thank you all. So we'll look forward. Next call is going to be first week of August. Our expectations for Q1 are certainly better, and with all the deliveries we're doing, it will be a very good discussion altogether. So hopefully, and we'll try to present information differently also for next quarter so that we can give you better information. I think it's important that you really understand the plan and that we can better share to all investors exactly our key metrics here. So that's one thing we'll take as the first quarter to revise a bit the way we present information today and give you more information and better metrics so that we can have a better discussion. Thank you all. See you in 2 months.
Thank you.
Thank you. On behalf of Onmobile Global Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.